Hey guys, it's Kevin with Watchhimtrade.com. Today's date, April 12th, 2015. This will be a video chart on NVGN Novogen. So this stock has been in play pretty much since the middle part of December when you got this big time gap up on big volume, and it's been fading back down and then getting gaps and fading down and getting gaps again, fading down, gaps again, fading down, gaps. And that's been the pattern. What's interesting here is each gap has resulted in the stock getting a higher low along the way, and we just made a higher high. So even though every single gap move and rally has ended up getting faded and ultimately been a good shorting opportunity, you are seeing this pattern of higher lows starting most notably in March. If I'm just marking 1, 2, 3, 4, and then this most recent gap. So that is a net positive overall for the stock. You're getting higher lows, and you just made that higher high this past week. However, as far as the way you want to trade it, it has still been a very, very good short for more days in a row than it ends up being a good long trade for more days in a row. So what I mean by that, the long trade's really only working if you're catching these gaps. If you are not catching the gap up and you try buying it the next day, you end up actually fading down and going sideways and then kind of getting bailed out by these gaps, which are taking it to new highs. So on a trading basis, the short side to me is where you want to look at, especially given that it did just make a new gap, and in line with its history, the next day gap down hard, pretty much giving up all of the intraday gain, and now maybe ready to start filling this gap just like the other gaps have shown a tendency to fill, at least somewhat. So I would be watching the base of Thursday's gap for a trigger. The low is 550, which is nice, just nice psychological mark, 10% above $5. So above 550, and she starts to trade a little bit differently and maybe set up to rally towards $6 to $7, but below 550, and it's in line with the other gap fills, and I'd be looking for a move back down into this $4.50 to $5 range. You can see you already had some of it on Friday. You got down to $5.25 after losing $5.50, so it did make for a good short. However, it bounced back up. So watch that $5.50 area. Just think that's the simple level to focus on in the short term. Longer term, you have found support at the previous gap up levels. So for instance, if you take the body of this gap that started in the beginning of March and extended out, you can see that's where it found support off the mid-March gap, and then you take the body of the mid-March gap and extend it out, and that's where it found support off of the late March gap. And now you're going to have this body here. You're going to want to see it come down and find support around here. That's just like what, 450-ish or so. Yeah, 450 on down to 420. So longer term, you need to hold that 450 to 420 area in order to keep the potential for more of these gaps that you have had on the stock over the last 3 to 4 months. Below $4, and I think it would be lights out. Probably find your way back down to $3 to $2. Now, if you look longer term on this stock, it got down pretty low for a reason. There's nothing really attractive about the longer term trend. I mean, it used to be $200, $300. Maybe they did some reverse splits or what have you. But bottom line is, you know, longer term doesn't show much to get excited about the stock. It's the short term picture that, you know, traders have been playing. So watch 550 in the short term for your triggers. Either holding it can keep the upside in play, below it looks for downside, and longer term that 420 to 450 mark. As far as the next gap and momentum trigger, let's see if you can get a solid hold above $6. Haven't been able to stay above 6. You tested it back in December, got rejected. Now you're testing it again. Hold $6. You can rally higher.